Hi friends, Simit here from InformedTrades.com. Today is Friday, August 1st, 2014. Time for our daily Forex chart review. Basically in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as a part of helping traders learn. These trades are real trades placed on a live account, verified by myfxbook.com, all recorded since I've been doing this on my blog over on InformedTrades.com. If a lot of information or any of the information I'm presenting is unfamiliar to you, we also have a lot of educational information on Informed Trades, articles and videos to help you learn, covering not only my style, but many other styles, many other approaches to trading. Check it out, share your knowledge. We can all learn together. Let's get started with a look at the chart of gold, which is customary. Okay, or how we've customary for how these videos usually work. Gold, big ran into support yesterday. Support was 1280. We talked about this, and sure enough, it bounced right off support. Looks like we are going to get a tweezer or railroad pattern. Basically, the pattern whenever you have one big down day followed by one up day, or vice versa. When you see that pattern, when it occurs at a support or resistance level, it's often a reversal sign. And I think we're going to see that here. Of course, I'm looking at it from the long term. You know, I'm buying and accumulating. I expect we're going to go past 2011 highs because of the macroeconomic situation from a fundamental perspective. Technically, the range is 1280 to 1330 or maybe 1310, depending on how you look at things. I do think we're due for at least a short-term reversal in gold, and I would anticipate a few more up days from here that we can touch 1310 before we hit 1270. And also, as I should note, we are now done with July. July was a month that many cycle analysts were saying we'd see a bottom in gold. So maybe this is it. Maybe this is the bottom. Okay, Bitcoin. Similar situation here. Actually, kind of very similar price action in a way. Bitcoin bounced off the 200 exponential moving average. It had support at 567, 2 consecutive up days. So we're still... I still think that if we run into resistance here at 633, that could bring out more bears. So I don't really think the trend has fully reversed yet. I was long, or I've gotten long at 522. I'm still holding on to that position. I'm looking for a 10 times capital return. So I'd like to see a Bitcoin price of 5,200. At the same time, I'm risking, I only put on a small position, so if it goes to zero, that's of course not preferred, but within my risk tolerance. Next milestone for Bitcoin is to see if it can clear 607, and then we have resistance at 630, which I think is going to be pretty formidable resistance. You can see it goes back to here even, March of 2014. Okay, so that's Bitcoin. Going on to the Forex pairs. Aussie Yen looks like it's finding support at its 50 simple moving average right here. I've got long here. My stop is, I enter at 94.71. That's where my stop is also. I took half off at 96, and now I'm just holding on to the remaining half. I really want to see it reach 96.45. Conversely, if it goes back down, it'll get stopped out at 94.71. Not really placing any adjustments to this trade. Let me see what other pairs I have on here, just to make sure. Okay. Excuse me. Aussie Yen, Pound Yen also. Now this trade has been de-risked. Unfortunately, it looks like it's coming quite close to my stop, and I may get stopped out here. Price is at the 50 simple moving average. Pound has really been declining over the past couple days, so we'll see what happens here. Let's actually take a look at it on the 4-hour chart. Trading view might be stalling, which is definitely unfortunate. They've been having issues lately for sure, some growth pains. Really great charts, but at least until they figure out their server issues, logging on during peak hours is a bit of an issue. Anyway, it looks like I'm going to get stopped out here. We are still 17 pips away from my stop, so it might not have my stop, but the way price is looking, I couldn't say it's. I don't think it's too favorable. Okay, so we'll just stick to the daily chart here. That's Pound Aussie or Pound Yen. Now going to Pound Aussie. This trade has also been de-risked. A little more breathing room here. About 60 pips away from my stop here. And both these trades have been de-risked. And just to clarify what that means I've moved my stop to break even. So the positions went in my favor. I moved my stop to break even. If a position comes down and takes me out, and I won't lose any money. Of course, I won't gain any money, but I won't lose any money. So I'm not really taking any action or any adjustments on pound yen and pound Aussie. Both those trades have been de-risked. Obviously, I'm hoping for a rally in the pound, but we'll see. Okay, that's the pound trades. Now for some trades that haven't been de-risked. Aussie yen, pound Aussie, and pound yen have all been de-risked. Now for my euro trades. Euro Kiwi, this position is very slightly out of the money. It's basically at, oh, now it just went in the money. So it's basically at break even. We can call it that. I do like the price action very much. We have an inverted hammer at resistance here, also piercing the 50% Fibonacci retracement. My stop loss is here. This line should be red. So these 1, 2, 3 candles in a row looks like it could be the beginning of a distribution pattern. We definitely have the long wicks I like to see, and it follows this big up candle. So we had a huge up candle. Then the range, the pair started consolidating. We have some long wicks suggesting that price could drop. And there's larger downtrend. You can see the 50 simple moving average and the 200 exponential moving average have both been trending down at least since. We could say at least since April. So I feel good about this trade. So far, so good, just a matter of waiting. This trade has not been de-risked, though, so if price shoots up to 58.63, I'll get stopped out. I'll lose a 0.25% account balance. That's Euro Canada, that's Euro Kiwi, Euro New Zealand. Now let's look at Euro Loonie, Euro Canada. This one is not looking as favorable. Position is slightly out of the money. It's not too bad. It's about 60 pips away from my stop. I would like to see, it's a stronger candle than I anticipated. When I enter a trade, if the candle is strong in the direction that's not in the direction of my trade. So, I am short Euro Canada, and we have a strong up candle today. It's reasonably strong. Strong defines as if it's how big it is, as well as an absence of wicks. So if the candle started and it just moved up and that's where it closed, that's a really strong candle. If it moved up a lot and then just closed at the top, that's a really strong candle. I don't like to see that when I enter. To me, that suggests that I mistimed the entry. And sometimes I'll even, if there's a big up candle right away, I'll close it right away. I don't like to do that too much. I don't like to tinker as much as, or minimize the tinkering. And this candle still isn't closed yet, so we still have a long way to go here. But we'll see. I'm not making any adjustments here. Let's see if price goes in my favor, or I have my stop at 46.97, 60 pips away, like I mentioned. So we'll see. Just a matter of waiting on Euro Canada and Euro Kiwi. Both those trades have not been de-risked, though, so I could still lose money on those trades. Okay. Now for an order I placed today that just got filled. So I placed it and got filled very quickly. It's live and currently in the money, which is nice, although we still have a long way to go here. Dollar Singapore. I haven't traded this pair in a while. First, we see a clear downtrend, right? Price is below the 50 simple moving average. We're basically at or in a little below, which in turn is below the 200 exponential moving average. So when we have the 50 below the 200 and price is below both, that's a clear downtrend. At the same time, we have a pullback within this downtrend. Here's a major swing high, major swing low. We pulled back 50% right here. When we pulled back 50%, we ran into the 50 simple moving average, which coincided with that 50% retracement, and also this resistance level, which is previously a support level in May. You could argue this was a minor support level in early June, another support level here in April, and even more significantly here in December of 2013. Big rally off the support level. Now it seems like it's a resistance level, and that often happens. Support becomes resistance. And we have inverted hammer out of this pattern here. So reversal candlestick pattern at a resistance level at a 50% Fibonacci retracement from a swing high to swing low. Basically everything I'd want to see in this trade. This is a great setup. I really like this. Haven't traded dollar Singapore in a while, but this setup I thought was perfect, or as close to perfect as one can get. So basically, I am short at 24.69. My stop is at 25.05. This red line here, 36 pips away. My target profit is at 23.63. It says 63 here. It actually should be 23.61. So I'm risking 36 pips to gain 108 pips. That is exactly 3-to-1 reward risk. Of course, I'd like a little more, but 3-to-1 is my bare minimum. Once I saw I could get 3-to-1 here, this trade was definitely working for me, or definitely something I thought I should put on. Now, I could actually, if I did an ABCD analysis, let's actually do that real quick. I'm going to delete this after I do it because it's not actually how I looked at it. But if we view this as point A, we view this as point B, and here's point C. We got a 50% pullback. Oh. So here we can 58% pullback. So right around there. I could target this point, 122.89, which would give me an even better reward risk. But I thought, here's the support level, 123.65 or 61 is a safer level to target. So I think that was what I decided with, and that was still 3-to-1. So I thought that was good. And maybe if things are going really well, I'll take half off there and let the rest try to shoot for 22.89. We'll see. First, let's see if the position can. If price closes at or below 24.44, then I'll move my stop up here to break even and de-risk the trade. So that's the first step. Let's see if we can get to that point. That's about it for the trades that I have on. Just put on that one trade, and now I have 3 trades that have not been de-risked. There's also a Canada yen order I have on. That was documented in yesterday's video. That order hasn't gotten filled, and it probably won't get filled. So dollar Singapore is the only new trade that I have on today. 3 trades that have not been de-risked, another 3 trades that have been. I always like to mention that because if a trade has not been de-risked, I could still lose money on it. I risk 0.25% per trade, so 0.75% of my account balance is now at risk. That's a really conservative, designed to minimize drawdown approach. You can definitely increase returns, increase risk, of course, by increasing the size of your trades. But I'd rather keep the risk small and shoot for a greater reward risk. Anyway, that's about it for the trades for today, what's going on in my account, how I'm looking at things. Any questions you have, anything you want to add, any opinions, questions, trades you're putting on, share them on InformedTrades.com. Have a great weekend. Best of luck in your trading, and we'll see you next week. Take care.